If you're looking for a solid strategy to trade cryptos, you've come to the right place. Today I'm teaching you my strategies for cryptos that you can use yourself to generate some income in the crypto market. Alright, so before we begin, we've got to talk about a bit of the problem with strategies and why the ones you have right now, the one you're trying to find right now, don't work in the market. Maybe you've come through this video and you cannot seem to find what works in cryptos. And that makes you feel like you miss out on big moves in the market every single day because cryptos move a lot and they have really massive moves these days. And if you cannot find how they work and what strategies to use for them, you just cannot make money. And that's really sad for people who want to be able to make money from the market and trading overall. And no matter where you go online, you'll find a different answer regarding what strategies work and don't work. Some people say, oh, trade this, trade that. Some people say, don't trade this, don't trade that, trade this one instead. This is what works. And that for sure makes you feel confused. I understand that. And you kind of don't have a path or direction to go in with regards to trading cryptos. I'm sure you've tried before copying trading setups blindly. Just find these setups online, you copy them, do the same thing on your own account, and it doesn't work. That's because they have an expiry date. All these setups you learn about online don't work for the long term. They work only for some time until they stop working. And that's because they are, most of the time, over-optimized for past data. They only work on past data really well, and they are like things that we have like 1,000 of rules, and they're complicated, but they will not work long term. And that's a big issue that we have to deal with. I also want you to be really aware of the fact that because this is cryptos and because cryptos are trading a lot, anyone online could say like shit and it's gonna work, right? It's gonna work because it's trending. They could say, oh, just buy when it's this and that. Because cryptos always trend right now, it's easy to make money. You don't have to be a genius to make money right now. You just have to buy at the right time, or so even if you don't buy at the right time, you could just have to buy and you'll be able to usually make money in the crypto market. And what I want to teach you today is not just that. It's not just, oh, buy when it's this. It's more about a process. So what you need is really a framework, not just a setup or strategy that will work a few days and then you'll be done with it, but something that will work long term. A framework you can use that's going to be adaptable for your own personality and what you are the best at trading yourself. And then you can adjust the same framework and create hundreds of strategies from it. You can tweak it, make it your own, and trade it in the market anytime you want. Now, if it doesn't work, and if your strategy that you are trading doesn't work, you can just take that framework, replace some parts, move it around a little bit, and things should work quite well after. Now, this is what will stand a test of time compared to all these strategies you hear about online that won't work for long term for sure, because it's just so dumb. All right, so let me jump right in. I'll share today with you two strategies that will work well in cryptos. All right, so the first framework to trade cryptos is a 3-time frame process that you can use for trending markets. Now, I'll put some time frame you can use here, like the weekly chart now, but you can also switch this. I'll show you after how that will work. But let's say we begin on a weekly chart. We identify the major trend on that chart. That's our first step, right? So go on the weekly chart, look at the big trend. I'll show you how that works in detail after on some charts. But we got to begin with the framework and the big picture view of things before we go in detail on this. Second thing is on the daily chart. So one time frame lower. We want to look at identifying pullbacks and reversals. We'll look where price is pulling back, so going against the trend a little bit, and waiting for a place that could resume the trend. On a forward chart, so again, one time frame lower, we look at entering on reversal setups or breakouts. So both ways work. I'll show you exactly in detail how that works with some clear rules really soon. But that is how we do it for trading cryptos on a 3-time frame process. So this works really well because of the fact that you are using a lot of confluence on 3-time frame, which is really good. Right? You have this time frame, the big picture view. Lower time frame is kind of more where price is heading. Then the lower time frame again for confirmation and entry, which is really good. Works really, really well in the market. So that's something that is pretty reliable. Now again, if you want to change this time frame, you could use whatever time frame you want to use. That's totally fine. I'm just using this here as a good example for me. I swing trade Forex and cryptos. So I need to have something that's a little bit higher and not too intensive. Not that I have to be there all the time to trade the market. But if you want to go on low time frame, go ahead. You just got to go backwards. So if you would like to trade a 15-minute chart, that's your lowest time frame, then you go backwards from there. So you look at your pullbacks and reversals on the 1-hour chart. So one time frame higher. I don't count here the 30-minute chart because that's kind of too tight, but it will be the 1-hour chart. That's one higher. And then 4-hour will be where you look at your major trend. Okay, those things work really well. So you can use any time frame you want. You just go backward from the one that you want to start to trade, the lowest one, and then go backward from there. That's how this would work. Now let's have a look at some charts. All right, so here we are on TradingView, and how this works is really simple. So you got these 3 time frame here that I've put. So we have our weekly chart here on the top right, our daily chart at the bottom, and our forward chart here on the left corner. So that's how we begin. Now we begin with the weekly chart. Let's just go here on a bigger picture view. And what we want to do, remember, is we said we will look at identifying the trend on this time frame. So what I'm doing is really simple here. It's nothing like really fancy. I use two moving averages. I use a 20 EMA and a 50 EMA for the trend. Now when price is above both these EMAs, it means that price is trending. Okay, so you want to have, of course, the price, then the 20, then the 50. So it has to be in that order, of course. So 20 EMA is above the 50 and price is above the 20 EMA. Okay. If you want to look at a downtrend, same principle, same thing, just the opposite. So you would have the price at the bottom, then the 20 EMA, then the 50 EMA, the highest. Okay. So that's what we will look at here. So for example, here, all right, if you go back a little bit, we have our 20 EMA here. This one is our 20. This one is our 50 here, the green one. So we have our price below, the 20 EMA here and the 50 EMA here. So we are here in this period in a downtrend. Okay, now price here kind of solidifies a little bit. So price crosses here. We are no longer in a downtrend. When that happens, we are sideways. Okay, even though the 20 EMA is below the 50, we're still kind of sideways because price has to be below this EMA. So here we're sideways. Here we go back to being in a downtrend slightly, but still we're touching the EMA a lot. So we could trade there, but not the best idea. Okay, here we are more in a downtrend. Now we come back here. We're no longer in a downtrend. Okay, here when we cross, we're back in a sideways market. Now we go all the way to here. Now this will not be a bullish trend here because the fact that our 20 is below our 50. Okay, so the 20 has to be higher to show us we are in an uptrend. Otherwise, it's not an uptrend, it's still sideways. So we need to have that right order as always. Okay, so an uptrend, you have your 20 EMA here. Then your 50 EMA here. And then your price is over here. Okay, so it has to be in that order for you to have an uptrend. And downtrend, same principle. You will have your price down here, and the 20 50 EMA are switching. So here we're not in an uptrend because we don't have the right order of the EMA. Okay, very simple. Now here we go back. We are in a downtrend again over here. We come back over here, back in sideways. This is where things start to get interesting, right? Because we go back and forth until we have this big move over here, where we are pushing beyond the moving averages. Now we have our switch of moving averages here. So the 20 goes above the 50, and it means we are in an uptrend because price is beyond that, of course. Now what we look for here is just the fact that we are above these EMAs. Okay, so we would just want to know we are in an uptrend. We don't look at anything specific here. That's about it. Okay, now we have to switch on our lower time frame, so our daily chart here, and let's have a look at what that does. Okay, knowing that we are here in an uptrend beyond the 20 and beyond the 50 EMA. So we go on our daily chart here. Daily chart is right here. And what we want to look at is identified here where we have the cross of our moving averages, where we are starting to have an uptrend on that market. It's 28 December. What we want to do here is find places where price is doing pullbacks and going to somewhat extreme points in the market. So how we do this is we could use multiple tools. We could use like 100 tools that we prefer. We could use the RSI. We could use the Bollinger Band. We could use the stochastic. We could use Fibonacci. Anything is fine here. You can plug and play whatever you prefer. And that's why this strategy here is really good because you can use whatever you prefer. You can use whatever tools you want to use. Just go ahead, use the tools you want, and you can deal with that. As long as it's an oscillator or a tool that can help you spot pullbacks or reversals in the market. That's all we care about. Now what we'll do here is we'll look at when price, in my case, touches the lower band of the Bollinger Band. It's a sign that price is at an extreme point because, as you know, price should be within the bands most of the time. And if it's not, it means that we are at an extreme point in the market. So I'm looking at when price touches, okay, this band, the lowest one. So we have here, price doesn't touch, comes back here, touches it once over here. We'll have a look at that later. Then price comes here. Now here we are at the upper band, right? So the top band, which means we are hitting extreme points, but this is with the trend. So we don't want to trade that. We don't want to buy here. That's the highest point. We don't want to buy there at all. We want to buy when price is in a good area of value. So here at the bottom. Price here touches back the Bollinger Band, the lower band. Then we have over here, price doesn't touch here, comes back here to touch it again. All these are places where we could trade, but we don't necessarily want to trade there. Okay, we gotta wait for our setup, which will go look on a lower time frame again. Okay, so price again touches here. Now we gotta make sure this is still an uptrend. Maybe it's not in an uptrend anymore. It's probably not at all. But we have many places where price touches the lower band of the Bollinger Band. Okay, there are plenty of them. Now we'll have a look at these first two, because these we are in an uptrend on the weekly chart, so we are good to go with those. And what we'll do is we'll switch from weekly to daily, not 4-hour chart. So we go over here, we'll open this bigger. And what this time frame is for entry and for being able to find setups that we can trade in the market. So we've got a couple of them. The two setups we've identified before are here and here. And what we care about here is our setup. So our setup could be different things. Again, it could be something with the RSI. It could be only price action. It could be only an engulfing candle if you prefer. I'm combining myself engulfing candle and a Bollinger Band break. So what I'm looking for is price breaking the Bollinger Band on the 4-hour chart, like we have over here, having an engulfing candle that goes back within the Bollinger Band, and then I enter the market. So here we have this exact setup. You have a break of the Bollinger Band, sits over here, break, 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 and then we have this here engulfing candle. We go back within the Bollinger Band with this candle. Really good setup, because that means that price was at an extreme point. The sellers were in control, pushing the market to extreme levels. Then the buyers come back in the market and are able to push price beyond the close of the previous candlestick. So they're able to bring back the price within a normal level, and also having price overcome the past couple of hours of movement to the downside, which is a really good thing. This is really good, because that could be a good setup to enter. Another one is over here. Next one, where we touch again the Bollinger Band on the daily chart. So it's over here. Again, we have the same principle. We have really the sellers pushing the market to extreme levels. Look at how strong this is, right? Giant candlesticks to the downside. Then we go here, and we have this over here, and we have price not yet recovering here, but over here, and making the engulfing candle right here. Okay, so not a perfect setup here, because I would like to have this engulfing candle closer and sooner. But because we are on Bitcoin, because Bitcoin trends a lot, we could accept this as a good setup. We are still recovering from our past few days of losses with only this one candle over here, this engulfing candle. That is a really good setup again. So how do we enter this? It's really simple. We are looking to enter above the high of our engulfing candle. And we put a stop loss then below the low. Now what I would do is I would look at like the past most recent lows, so the past couple candlesticks back. So 1, 2, 3, 4, 5 over here, 5 candlesticks back. Now you have a stop loss here. Now we just have to enter the trade. Now I'll show you how we take profit in this. It's really simple. And let's see how our other setup would be like. This setup we've seen here before, same principle. We enter beyond the high of our engulfing candle. We put a stop loss below the low of the past 5 candlesticks over here. Now, how we want to do this with the profit is really simple. We want to not put a take profit because we are trending now. So a take profit here is counterproductive. We want to be taking profits as we increase in price, as price goes in your favor. So what we do is we look at the highs and the lows in the market. So let's see what we have. We have price coming up in our favor here, making our first high. Now we just entered a trade here, so it doesn't matter. We won't do anything for now. Price comes back here, makes a low. Okay, price makes a high that's not higher. Price makes a low. So now we want to stay in the trade. We are back at break even. We didn't really move that much. Okay, we're not gonna make money on this at all. So we want to be able to wait in that trade. We have a stop loss. We can keep it there. It's all good. It's all taken care of. Price kind of not makes it low, but kind of goes back up and makes a new high here. Now when we see this and we see price making this new high, we can start to think about protecting your losses. Okay, so being able to not have a huge downside there, because we're still like far from our original price of entry. So what we'll do is we're going to move a stop loss, the one low before that high. So over here. Okay, now if price were to come back here and hit a stop loss, it's because the trend stopped and we are going to probably head to a sideways market or a downtrend. So not good. We don't want to be in the trade. So from here, we want to just move our stop loss as we continue forward. So now we are pretty much break even, which is good. We want to wait for price to make a higher high. So over here, price makes a high and comes down here to make a low, then a new high again here. What we want to do here in that case is we want to be able to bring our stop loss to either this low here or this low over here. Okay, depending on how we are conservative or aggressive here in the market. Price makes this high, comes back to the low, makes a new high. I will bring my stop loss here. Okay, it kind of makes sense. We don't want to be too tight in this. So, and we don't want to also wait for profit to go back in your favor for a long time. So that's good. Now price goes down here. We could call this a new low. Now we have a huge run here where we cannot really move a stop loss too much. Okay, let's say price moves here. Oh, we cannot actually do that. Price moves here, pulls back a little bit. We want to pull back there. You want to see price going here. We can move a stop loss all the way to here, to the low over here. Now price makes this big jump over there. Want to see price pulling back a little bit here. We can move a stop loss to here. So what we're doing here is we want to wait for price to make a high, come back a little bit, pull back a little bit, then we move to the low before that. So we are safe with that low, okay? And we just put a stop loss below the low, basically. So pretty simple. Now price moves there, makes a new high again, and starts to pull back. We can move our stop loss to, let's say over here, this low right there. And we just move like this forward as we continue forward. Now price here starts to go sideways. So you'll see how that works out with a trade. Price then goes here, makes this high. Now I would try to secure over here because we make this new high. We're not going too far either. We've had a really big run so far. We can move a stop loss here to secure our profits. We could leave it here, it's no big deal. We could leave it there if you want. But just because we've been having a big move and price starts to go sideways, and we've been in trade for kind of a long time now, like about 2 months already, we can start to move our stop loss here. Now price will probably stop us out over there as it goes back down. Let's just put an arrow here for our reference. So we'll get stopped out over here. But the cool thing about this is it's trending, so we are in a good market phase for that. So let's just have a look at, and this is, by the way, I want to make it clear, this is a ideal scenario. Maybe when you trade live, it's going to be different, not exactly the same. That's fine, that's totally okay. But this is just what you can expect from the strategy if you trade it properly and you're patient enough to let it run for a long time. So here we'll go and calculate this over here. This was our original trade. And now we're back to over here. So this comes out to be a almost 10R on this trade. This is insane. Okay, this is really, really good. And you won't get this all the time for sure. It's gonna be more sometimes like 2, 3, 4R. But 10R is amazing. It's rare, but it can happen for sure. If you trade these kind of trends and you do the right thing, you trade your stop loss properly, this can happen often in the crypto market. And after, as you can see, price has been going down from there. So we were the right time to enter on this trade. Now our second trade happened later. It's in principle here. So we have entered here on the market. Now what we'll do is the same thing we've done before. So price goes here, makes this high, or makes this high first, but that's just too close. We won't move the stop loss yet. Price makes this high over here. And from there, we'll be able to move the stop loss to break even. Okay, so price went back. When it pulls back a little bit, we can move the stop to break even or so, or close to it. So we can move to the low over here, or stop loss. Okay. Again, price goes in your favor again. So make this new high and starts to decline a little bit. We can move the stop loss to here, this low. Price makes a new high. We can move the stop loss to this low, and so on. Okay. Price makes a new high over here. We can move the stop loss to here. Price makes a high to here. And move your stop loss to here, or either here or here, okay, whichever you prefer, when it starts to decline here. Price makes a high over there, or say over here. We could move a stop loss here. Not so, a bit aggressive, but that's fine. Price moves here, starts to decline, we can move a stop loss to here. And actually one, I think will get stopped out, so we cannot really push it that much over here. We will get stopped out over here, this low, or so, okay? So put this here, and let's see how far we've come. Still, this is a pretty big move on this trade. So we had our entry here. Stop loss right there. And we are moving to here. So roughly a 9 hour in this trade, which is again pretty good. And we've kept the profit safe along the way. We didn't have like this big trade that has a big profit and all left open. We make sure we protect the downside first, and we can move forward with the price like this. So pretty good. Okay, this is really, really good. And this makes a lot of sense. So that's how we trade cryptos in that case. Now, if you want to see the rules of that strategy, let me just pull this up over here. Just to recap what we talked about so far. We have all these rules here. Just follow these rules, will be good to go. Okay, this is to recap what we talked about so far with the market. Make sure price is above the 20 and 50 EMA. Okay, so price is to be priced higher, 20 EMA, 50 EMA, in that order. On the weekly chart, first step. Again, you can adjust your time frame however you prefer. You can change this, that's fine. Whatever you prefer, you can just do that, okay? Wait for a strong pullback on a daily chart. So you wait for price to hit a pullback, so have a move to the downside. On a daily chart, to an extreme point. We don't want to enter the market anytime. We want to be able to enter the market at the optimal price, which is an extreme point. So either the Bollinger Band, the lower band, the RSI being oversold, stochastic being oversold, or all these tools, Fibonacci being at a lower pullback level, all these things work. Then we wait for a reversal or a breakout setup on the forward chart. If it's a reversal, like I'll show you here in this video, you look for a break of the lower Bollinger Band and an engulfing candle to come back within the band. You don't want to be outside the band when you enter the trade, you want to be inside the bands. Then we look for a breakout. If you prefer to trade breakouts, you can look at a breakout of a clear range on the forward chart. So you have this range, a breakout of the range, and you want to have the RSI being overbought. So in the direction of the trend. It's contrary to what people tell you online. It's the opposite, but it works really, really well. A breakout of the range when the RSI is overbought. I know it's counterintuitive, it's different, but it works really well. What you do is you place a limit order slightly above your setup candle, slightly above the candle that break out to the range, or slightly above the candle that formed reversal, so the engulfing candle. A bit higher than that, you put your entry there, your limit order. Then you place a stop loss below the low of your setup, so below the low of your candlestick. Place a stop loss. For a reversal, you look at the lowest point of the past 5 candlesticks. For breakouts, you place a stop loss below the low of the first candlestick that break out outside the range. So when you have a breakout, you have a candlestick breaking out the range, you put your stop loss below the low of that candlestick. Then you trade your stop loss on the forward chart to the next higher low when price makes 2 higher highs. It's like we shared before. We are here, for example. Just zoom in. Price makes a high over here, right? So we were here. We want to wait for price to make a high over here. Now, this is our first high. Second high, we move to here, the first low. Okay, again, price goes here, makes a second high. We move to the low again after here. Okay, so one we kind of move with the price as price goes forward. You want to be conservative with this, but not too conservative. You want to be kind of aggressive a little bit, where you want to move your stop loss progressively. When price makes a high, pulls back a little bit, you move your stop loss to the low before that. So that's how we do this. And this is the rule. It's not difficult, not hard to do at all. It's really, really simple. Leaves you some room for plugging things that you prefer, interpretation a little bit, and you're pretty much good to go with this. So that's your strategy for trading trends and cryptos. Alright, so I decided I will make 2 videos out of this because it's getting really long, and I hope you are enjoying this strategy so far. I'll do a video tomorrow with the second strategy to trade reversals. If you want to see that, I'll try here somewhere when I finish it and when you are able to see it. But second video will cover strategies to trade reversals in the crypto market. Make sure you stay tuned in for that. As you know, Eightcap is sponsoring the Desire to Trade X 8cap Crypto Week on my channel. I suggest you open an account with them right away if you want to trade cryptos. This is the broker I use myself to trade cryptos, and that works really well. So if you want to start to trade cryptos and get my tools, indicators, and algos for free, check out the first link in the description below to sign up with Eightcap. Open an account with them. As soon as you deposit a minimum with the broker and you start to place your first trade, you'll be getting access to all my resources, algos, and tools I use to trade cryptos. To do that now, if you've not done it already, open your account with them. Again, they are the broker I recommend for all cryptos and everything I do in the crypto market. If you have any questions, make sure you comment below in the comment section. And I'll catch you back here in the next video pretty soon. Ciao.